Hello, everybody. We'll get started with the webinar at this time. My name's Troy. I'll be leading the session today. Before we get going, just give me a quick okay in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you. If anyone runs into any trouble, let me know. I can make adjustments as needed. Lot going on, obviously, in the markets fundamentally. We're going to take a look at, obviously, some technical analysis strategies. And when there's such news as we have occurring of late, and especially even today with some of the announcements out of the US, there's going to be some huge movements for sure. So we can prepare some market ideas, some pending trade ideas. We'll take a look at which assets really we might expect some large movements from, and set up with obviously proper risk management for what's right for you on your account. We'll look at some different strategy concepts, and obviously you can choose what's right for yourself. As we get going, keep in mind, all investments have risk. No one trade is guaranteed to win. You obviously can have losses with any move that you make. It's the idea of managing risk, though, with stop losses, hedge positions, that sort of thing, keeping the trade size appropriate for your risk tolerance, that sort of thing as well. As we go along, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective so that you can add some tools to your tool belt, so to speak, so you can improve upon or start to build some trading strategies with a nice foundation, and with some strategies that make sense and that have worked over time for many traders. So some things to keep in mind with regards to technical analysis. There are a couple main ways that technical analysis can work for you. I tend to lean towards the manual methods of technical analysis. That means drawing your own lines, finding price levels, drawing trend lines, finding channels that are repetitive, that sort of thing. And other methods would be using indicators. And so, hello, Mumtaz. Good afternoon, good evening, depending on time zones out there. And so indicators also can be useful. I tend to like to read the charts myself, decide what's happening in combination with the fundamental news, and then decide which signals I trust from the indicators and which signals I choose to ignore. Because indicators a lot of times are really good in one direction and not so good in the other, throwing out false signals if the markets are running in one direction. If markets are ranging up and down, up and down, up and down, then indicators are great in both directions. So it just depends on what the market is doing as to whether you can trust the indicators only in one direction or back in both directions. And so that's why I think it's actually simpler to start with learning to read the charts yourself, to create your own signals, and combining that with the fundamental news so that you already understand how to pick what direction you trust better, or whether maybe you decide you're equal in both directions, in which case then indicators are even more useful. Okay, so with that said, let's move forward. Any questions as we go along, please interrupt me at any time. If you want to add something, please type add. I'm happy to share ideas and concepts that you all come up with as well. Yes, Mumtaz, this webinar will be recorded, as are all of them now. You'll find the recordings on our YouTube channel. You can just go to YouTube, type in the search at the top, AvaTrade channel, you'll find it. There's a link within that channel for English webinars, and you'll see all of my webinars, as well as our new chief analyst's webinars. His name is Naim, and so you'll see those as well. All right, great. So let's jump on first the fundamental news real quick, and then we'll get into the charts. So some mixed news today. We see a lot of red here, right? A lot of red on the futures and on yesterday's market it was, and then, or I'm sorry, Friday's market, and then also as we've come into the day, we've seen it bounce into the green, back into the red, and even into the green again, and back into the red. So what's happening? Lawmakers are near a huge stimulus package in the US. Okay, so this has got the markets kind of jumping around a bit. We see the volatility index is back up in the green. It was down in the red a little while ago. As the volatility goes up, usually the markets are dropping. And as the volatility goes into the red, meaning volatility is dropping, the VIX index, then we see the markets tend to go into the green. So it's been back and forth today. So that's actually been very nice for technical analysis, for technical traders. There's been some nice breakthroughs. There's been some nice reversals. And you don't have to be right on every one to make a profit. You can take your shot on reversals. If they're wrong, then there was probably a breakthrough, and your buy stop or sell stop then is probably doing well. The fact that as there was anticipation of a deal today with U.S. lawmakers for a huge stimulus package, we saw markets go into the green. And then when they said, oh, they're arguing and bickering, there is no deal yet, we see them go back into the red. What does that tell you might happen if they announce here that they sign a deal? If there's some $1 trillion, $2 trillion, even higher stimulus package with money being sent out to pretty much every American, they're almost talking about with cash payments to people, also increased unemployment benefits, small business benefits going out, hundreds of billions of dollars to keep small businesses afloat that have had to shut down because of the quarantine, on and on. And this is going on not just in the US. China's doing similar stuff. European nations are coming up with stimulus as well, all around the world. What do you think happens as major stimulus packages are passed? What might happen? And we can see right here, NASDAQ futures just turned a bit green. Okay, so there might be some momentum swings. It doesn't mean it'll hold forever. It doesn't mean that's it. Buy on all the major indices and they're going to climb. The Dow will gain back 10,000 and reach new highs again in the next month. It doesn't mean that's going to happen. But you might see some momentum for nice breakthroughs for technical trading. And then eventually it'll reach a resistance level and probably pull way back down again, right? Because overall, if we look at the articles, they're talking about long-term potential downturn in the economy, maybe a long-term recession for months long before there's an overall recovery. And so sure, excitement that maybe the huge crash might be ending if some of these major stimulus packages get passed, and you might see some bouncing in the market, but then you'll also see some realization that the overall picture for the coming months is probably not good. We already saw some horrible numbers out of China just a week or so ago. The first quarter numbers out of the US are probably going to be bad as the scheduled economic numbers start coming out. So, we look at the economic calendar and we look into tomorrow. What can we expect? New home sales, manufacturing numbers. There's going to be the FOMC talking. So there's a lot of numbers that are going to come out, manufacturing out of Great Britain, German manufacturing tomorrow. These are all huge economic numbers that'll be coming out tomorrow. Perhaps they'll be really bad, maybe not, right? But in the coming months, if these ones aren't bad, probably the next ones could be, right? Because there's all these quarantines all around the world. So you could take advantage of any bounce that might happen today if the US passes a stimulus package. You also could see the bigger picture coming, that maybe around the world there's going to be some poor numbers over the next months as well. So banking on maybe some reversals as well. If markets shoot up, the potential that there could be a pullback down as well. Okay, so there's huge potential for technical traders, for breakthroughs and for reversals, because there's so much mixed news. Okay, let's take a look at maybe some other articles. Fed aims bazooka to backstop coronavirus hit economy. Okay, so what's that mean? It means the Fed in the US is making some huge moves to help the banks out, to help liquidity of funds for businesses. They've already made some moves. Trump announced today. The markets went up into the green. I think the Dow jumped 1,000 points when it was first announced, and then right back down. Okay, that's what I'm talking about. So if the Senate and the House in the US pass this stimulus package, you probably see some momentum. And you could take advantage of that. And then you'll probably see some reversals eventually too. It's great technical trading, okay? And, we hate to take advantage of the agony that so many people are going through financially because of this. And obviously, we're concerned about the health of so many people, but this is trading. We have to take advantage of what we can to try and pull some extra money in for all of us. to try and get it from the market. So let's jump on the charts. Let's take a look at what's happening. We understand what's happening fundamentally, right? Mixed news, some positive news with stimulus, negative news with overall economic conditions. We get it. So let's go ahead and get to the charts and see what's going on. I think an interesting thing to compare is gold and the crypto 10 index. Okay. Why are gold and cryptocurrencies similar? Neither has a nation to call home. Okay. They're nationless assets. So the financial conditions in one country don't affect the value necessarily of the asset. Okay, so many times, and we looked at this in months prior, you see the cryptocurrencies act similar to gold as a safe haven. Okay, and so I've got this up 30-minute candles. Look at the jump. Gold jumped and then cryptos followed. And sometimes it's the opposite. You'll see the cryptos jump and gold follow, but many times you see a correlation here. So once you saw gold breaking through resistance levels, okay, technically speaking, here's my technical analysis, it broke through, okay, climbing up, and I see that maybe at that time, and let me show you, at that time, the cryptos were still down here, not breaking through the resistance. Okay, you see this was back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 or 12 half-hour candles. This just made its move an hour ago. Okay, breaking through the resistance level. We've seen this pattern a lot. Okay, and you know, Bitcoin dropped below 5,000. It was plunging. Guess what else was dropping? Gold, right? And we talked about, you know, why was gold dropping when there was so much fear on the markets? Gold's a safe haven. Why was it dropping? Well, people were so afraid that things were so bad. The theory is you can't buy a house with a gold bar. You can't pay your mortgage. You can't pay your business expenses with a bar of gold. You actually at some point cash the safe haven in when things are bad enough. That's what people are buying gold for, waiting for times when it's so bad that the value of everything else was lost, that now they can cash in their gold for that economic emergency. And it got so bad that that's what was happening. Bond yields dropped. It was a warning sign. The prices went so high on bonds, so that safe haven was disappearing. Stocks were plunging, indices were plunging. People were concerned that they actually needed cash in hand, and so started selling off gold. Now, with some of the positive momentum today, with potential large stimulus in the world's #1 economy by size, the US, we saw some momentum where folks maybe felt safe to put their cash back into gold as a safe haven. So it's kind of weird. Fear was dropping a little, so people bought back into gold because they expect over the coming months, maybe, right? Bad economic conditions, maybe recession, but not so bad that they think the whole system is going to crash. So they feel safe enough to put their cash back into a safe haven like gold. And so we saw gold go flying up. We see it here. What, $80 an ounce, okay? So we see gold fly up $80 an ounce during times of optimism. Why? Because people know the bigger picture is probably possible recession in some countries, maybe in many countries, but with all this stimulus, feeling safe enough to, okay, I'll put the cash out of my hand and buy back into safe havens. And so this is my theory anyways, combined with what I've read, okay, as to why gold is going up with less fear and was going down with too much fear, okay? And so we saw the cryptos follow. So this is a trend. It's interesting to watch. One sometimes leads the other. If you saw gold breaking through and you saw crypto trending up towards the resistance, you could have prepared a buy stop above the next resistance level if this was the spot, and you'd have been in on this breakout candle here. This is the crypto 10. You easily could have traded only on Bitcoin or an individual crypto. I tend to like the indice because it's more balanced, okay? And so we see that, and we see gold led the way. It broke through its resistance here first, and then the cryptos followed, okay? Any questions on that? Very simple strategy. Find two assets that you think correlate with each other. And when one breaks through ahead of the other, if you already have identified a pattern that they tend to move in the same direction. If one made its move first, you could take a shot at the next one. Either market move or pending order in this example would have worked with a buy stop just past the next resistance point. Type OK if you're with me on that. Just want to make sure everyone's hearing me still and we don't have any technical issues. Okay, great. All right, so what about oil? I think this is interesting to take a look. Well, let's talk about gold first. Let's finish with gold and then we'll come back. So gold has reached a resistance point. This was obvious that this might be a spot where gold would stop rising. Okay, so what do we see here? We see old support, breakthrough becomes resistance, and that big climb up stopped predictably right on our old support level. Okay, so for those of you who are new to technical analysis and you think, come on, do these patterns really mean anything? Do they really repeat each other? Many, many times they do. And you'll see that this happens too many times to be a coincidence. Okay, you see exactly where this strong rise, I mean, it rose $80 an ounce in a short period of time and stopped and started to pull back exactly at this spot, which if you look is the exact support level from over here. Support, breakthrough, resistance, it comes flying up and right at that spot stops. So what kind of pending order could we put above the resistance if it breaks through that resistance? And so you would have known to take your profit just before this resistance if you were scalping. Yeah, we could put a buy stop up here in case it breaks through. No guarantee it'll keep running, but look what we've seen on the chart. Okay, huge runs. If it breaks through, you've got a chance for maybe a big run up to the next resistance level up here. Okay, and because gold's been doing the opposite of what tends to make sense in most people's minds, meaning gold's climbing with good news, if the US Senate and House pass that economic bill, do you think that might create enough momentum to break this resistance and gold goes up even more? Since gold's been climbing with good news lately, it very well could. And what if there's an announcement that they just can't reach a deal, which is the latest news? It's kind of been leaking out. The Democrats are trying to add on what's called pork to the bill, meaning, hey, we want more money for, I don't know, alternative energies. We want more money thrown in there to help stimulate wind turbines or solar panels. They start to throw on their wish list. This is what a lot of politicians do. And the Republicans are saying, no, this is about helping the people, not trying to pad your wish list. And so there's a lot of bickering back and forth, and they haven't gotten it through today. And that's why we saw the markets turn back red again. Okay, and maybe gold trying to pull back down, which is strange again. Bad news for the deal, and gold wants to drop. Very strange. But we talked about why that might be, the reasoning behind that. The good news about technical trading, you really don't have to know the reason why, do you? You just find the price levels and you trade. So could you do a market sell right now? You could. It's just below the resistance. It's bouncing down. You could go for a shot at a market sell and maybe have a take profit at the first support level. You don't have to risk much. Stop loss could be just above the resistance. Plus you have your buy stop up here. If it does reverse and break through, you're in on your buy. Okay, so pure technical traders do very well in this environment because there's so much conflicting news and the news changes so fast. The fundamental news, maybe you can't trust it to last for more than an hour. So technical trading is great in this environment. Go with what you see. Many times it'll do a repeat of what's happened in the history. And if it doesn't, be prepared for the reversal with a pending order. So this is a 4-hour candle. If we go to 5-minute candles, we can see the whole time I've been talking, this has dropped down off the resistance. For the last 15, 20 minutes, it was at 1561. And this is interesting. You're on 5-minute candles and it looks like, why in the world did this reverse right at that spot, right? And this is the idea of doing an outside in look, meaning look at the big candles. We're looking at 4-hour candles and we can see clearly, resistance level right at that price. You come into the 5-minute candles and you don't see the resistance over here. You didn't know that was there. This is that red line that I drew, and I said, look, that was the exact support level from way back, and it reversed right off that line. So you could have had, what kind of pending order could you have had right here if you saw it approaching that resistance level? Besides the fact you would have bought on the breakthrough and gotten out before this level, you could have prepared a sell limit to sell once it reached that resistance level, and there it went back down. Okay, so from 1561, it's down to 1549 already, just in the last 20 minutes or so. Okay, directly off the resistance level. Again, let's see this drop. Okay, that's what, $12 per ounce. You could have already made a huge take on the reversal off of, let's go back to the 4-hour candles, off this old support level. Support, support, we follow it over, here's the reversal, directly off that support level. So buy stop would have gotten you in here on the breakthrough of the resistance on gold. A pending sell limit gets you in on this reversal off the resistance, okay? Mumtaz, I'm not sure I understand exactly what you're asking, but if you're trying to calculate exactly when you should enter, when you should get out, we're looking at price levels, okay? Support and resistance levels, okay? So as soon as I saw this hesitation off of what is a well-established old support level, we see the rush up, we see it reach the resistance, and as soon as you saw that it started to pull down off the resistance, boom, you can do a market sell. If you didn't have time to sit and watch it, you could have had a pending order just before that 4-hour candle resistance to sell. That would be a sell limit, okay? And so you'd already be, I don't know, $10 up per ounce in your position. A 1-lot position already paid $1,000 if you get out now, if you're scalping, okay? A lot of scalpers with technical trading, you don't rely on the movement necessarily to continue forever. A lot of scalpers, they're risking a small amount to the other side of the resistance. If it breaks through, small loss. If it reverses, boom, already made 3 or 4 times what you were risking just in the last half hour. Okay, so without even seeing it, we were talking about the potential for reversals. Then we looked at it, and there it is. Okay, as we were looking at the fundamental news, we were talking about big reversals off resistances, momentum not being sustained for the whole day because of conflicting news. And so we're just seeing an example of it here on gold. All right, let's take a look at oil then. And so this is an opportunity I think that you could still go with a buy stop above the resistance, waiting that maybe that bill passes. And I'll tell you, they're going to pass a bill eventually. I'm talking about the US Senate and House of Representatives. Might take them a little while, but they're going to pass a big stimulus package. And when that happens, you're probably going to see a huge movement on gold and a huge movement on oil and huge movement on indices. Okay? And do you have to predict what direction? No. Prepare a buy stop above the resistance with a short distance to your stop loss down here maybe, or a hedge position if you want to hold it longer without risking a breakthrough, and then it comes down and hits your stop loss and then goes flying up again. It's frustrating when that happens. So you could create a hedge situation where once your initial position opens, you have a hedge trade down here in case it kicks back down. Your sell stop would kick in, and then if it went back up, your original position is still on, and the hedge position has a stop loss. I don't think that strategy is conducive necessarily to today's environment. I think banking on the reversal, boom, you take your profit. If it breaks through, it tends to keep running in today's environment, this week's environment, this current environment of fear. Okay, we get big runs. So I didn't put oil up yet, Philip. I'm about to. All right, so let's look at oil. And let's see what's going on. Let's look at the bigger picture, 4 hours. Okay. Oil just came back to a low near the $22 or so low that it's been on. Okay, you only have to risk about $1 to get below that low. It's at 22.60. If you were taking a buy here and you put your stop loss at 21.50 or so, 21.60, you're only risking $1 per barrel. Okay, why might oil hold above that 22 mark? We talked about it, right? There's some positive hope that there's going to be a stimulus today. So if I did this, and there's no guarantee it's going to rise, right? But let's say I take, I don't know, a one lot position. Obviously, I have a large balance here in my demo. You take the position that would make sense for you. If you thought, okay, this is going to rise and not break the support. Okay, so I opened my position. I make sure I have my stop loss at a spot that makes sense to me, maybe 21.50 or so. I'm risking about $1 down. Okay, where might I take my first take profit? And you don't have to close the whole position if you're watching it, but if I'm programming the take profit just before this next resistance level, right? So I say, okay, maybe around 27. That's before the next major resistance. Why would I bank maybe on a shorter term move rather than a longer term move? Because I think there'll be momentum with the stimulus in the US. Good news for the world's #1 economy with big stimulus might be enough to push oil up to the next resistance level. Why am I saying I would take a quick profit? Why do I have doubt that it would keep running for a long distance? Not that it couldn't, but why would I have doubt that it might go up to above 30, 35, 40? Because there is all this doom and gloom around the world with major economies shut down. There's fear that there can be a long-term recession maybe, or a mid-term recession. So you might be looking to scalp. This environment is very conducive to scalping because the momentum keeps changing direction. If you catch the momentum, you could take advantage of that opportunity, then get out. Okay. Now, so where might I take my profit? 27 makes sense to me, just before this resistance at 28. Okay, so I might program take profit around 27. Okay, there. I don't have to keep watching this. I've got my fingers crossed that the momentum, right, is there with this potential stimulus coming, and I let it go. I only have to be right 1 out of every 3 times to profit on this, because I'm risking a $1 down to make what, about $6 up. 1 out of 4 would profit, right? 25% accuracy with this setup would be enough to profit. You see, there I go. I'm up like $400 already. Why was I choosing to set up a market buy instead of a sell stop? Why was I not banking on a breakthrough down? I'm combining my technical analysis with what I know about the current fundamental news, which is maybe some positive momentum with a potential stimulus coming that would be good for oil price, right? Stimulus for the world's #1 economy means maybe better demand for oil in the future. Type okay if you're with me on those concepts. Okay, now everybody's different about when would you take profit. Let me show you one concept. I might say, okay, here we go. Let me modify. Let me go to, this is the current open position. Let me go to market execution. Let me go 0.25. Okay, there's 25% of the position. I'm about 25% or 30% of the way to my take profit. So maybe I say, let me close 25%. So I change on market execution to 0.25. I have 1 lot open, right? Let me close 1/4 lot. I just did a partial close. Now I just put X amount of profit in my pocket, right? I took 1/4 of the position. Now it's still up 500 because the rest of that 3/4 of a lot is still climbing. Now, as it gets halfway up to my take profit, I could close another 1/4 of that position. Then at that point, even if it went all the way down and hit my stop loss, I'm still an overall profit because I'm only risking $1 back. And if I'm up $2, $3 and I've taken profit, now I only have half that position still open. If it even goes back to the stop loss, I've only lost half of what I was initially willing to risk. Plus, I profited a lot more than that with my partial closes. Okay, this is one way to do it. Another way would be to put a trailing stop. How do I put a trailing stop? Right click, trailing stop option, you can pick the number of points back. Okay, very simple. And then that, if it goes back that distance, it closes the whole position, preserves the rest of the profit. If it keeps running with momentum, then okay, great. All right, so I might say, okay, I've gone up another X amount. Let me go to market execution again. Let me change 0.25, close. Okay, now I've closed half the position. I've collected, I don't know, $600, $700 profit. And now I can risk free. Okay, half a lot still open. If it goes all the way to my stop loss, that's only $1 back times 500 barrels. That's $500 risk. I've already pocketed more than that. Okay, so now I'm risk free and I can just let it run all the way to my take profit and leave it alone. I don't even need to watch it. I used the bounce. Here was the support level, support. We happened to catch it. It was good timing right on the support. That's why I did a market move. If it wasn't on the support, I would have programmed a buy limit, which buys from a lower point. So once it got to the support, it would have bought. Okay, so now we could just let this run if we wanted. If you wanted to close the whole thing, obviously you could. Everyone's different with at what point you want to close it, right? I think that's a pretty good support level at 22. All right. Any comments, questions before we move to another asset? Okay. I don't know if any of you are making moves at all as we're doing this. Obviously, I'm not here to advise you to take trades or not, but as you see the setup, you've seen the fundamental news, you've seen the technicals. Don't be afraid. If you want to trade, you can. You know, according to regulations, I can't tell you to make the trade. I can show you the information, and many times it can work out, quite obviously. Okay, so let's look at maybe Dow Jones. Don't we see something similar here? 4-hour candles, support level, support. It's trying to climb. Why would this maybe shoot back up? Stimulus deal getting close, right? Do you have to risk much to get underneath this? No, you don't. It's at 18.45. Okay, you could take a minimum trade size, put it just below the support, and the next resistance level, if we're looking at 15-minute candles, okay, you could take a profit here. If you think it'll be more momentum than that, today it already got up to here. Okay, this was today, 15-minute candles. So this easily could rush back up to that resistance level. We understand why it's trying to climb, right? Fundamentally, I think people understand there will be a deal eventually in the US. And so for this to break the lows down here below this support, maybe you would deem that less likely than the ability to reach that resistance level up there. If that was the case, then you go ahead and you make your move, right? And so if you were doing a market move, we could do a minimal trade size. Listen, these indices can move fast. You can lose a lot in a short period of time. You can gain a lot in a short period of time. So be careful trading the indices. Probably want to err on the side of caution if you do trade on it, if it's something you think looks good. So if you were taking a minimal trade size or whatever trade size is right for you, then you're setting things up and you're saying, okay, where might my stop loss be? If I'm putting it down below 17.9, that's below this support level down here. So if I set this up, stop loss 17,900, and my take profit up here at, let's say, 19,400. I'm just playing the numbers here on the chart. Potential profit more than the potential loss, okay, for my risk management. Could it keep dropping? It certainly could. So this is how you might set up a market move, right? Stop loss, take profit, trade. Now, what if you think, nah, it's gonna come down to the support level first? What kind of pending order could we put right down here? Let me draw my line, move it up. I'm not going to do the market move. I'm just showing you that's one way you could set it up. So If you say, nah, I want a more perfect entry point, I think it's going to come back down to this support level. What kind of pending order would buy from down here if it drops back down? If you say, I'll wait, I'll program it to buy from that support level. If it drops down, great. If it doesn't, then I'm not in. What kind of pending order? Buy limit, exactly. So every trader's different. If you want to narrow the strike zone and be more perfect with your entry point, then you run the risk, okay, you might miss it because it could go running up now, right? But if you're more patient, you can risk less to be below the support, right? If you took a buy from down here, if it triggers a buy limit from down here, then your stop loss to get below this support level doesn't have to be as far away. So in effect, you could take the same trade size and risk a lot less, or you could take a bigger trade size and risk the same amount, thereby raising your potential profit to the same take profit mark. So let's do that. Let me show you how you'd program a buy limit. Again, this is not me telling you you should do this. It's one option to have a small risk with a much bigger profit potential going with the fundamental news and a proper technical entry point. So pending order, buy limit. Let's say we want to get in at 18,150. Okay, 18,150. And then I'm going stop loss, 17,900 would be below this support. 17,000. Now I could even go 850, right? A little further down just in case it tests it and then goes back up because we're getting in at a much better price for our buy if it comes down here. So I'm moving my stop loss even past 17,900 to 17,850. It's still not very far down if we get an entry at 18,150. So that's only what, 250 down to my stop loss from the entry. If we get in at 18,150, it's 150, 300 down to be exact. And then take profit. Maybe you say, oh, I'll take profit at the first resistance, 18,950. Okay, it's more likely to hit that than it is the next resistance if it does bounce up, 18,950. Okay, so I'm risking 300 to make a potential profit of 800. That's the setup here. At price 18,150, take profit 850 up, stop loss 300 points down. So almost 3-to-1 ratio with what I'm going to try and make compared to what I'm risking. So again, by setting things up like this, I only need to be right 1 out of every 3 to break even or so. Okay, if you're even 50%, wow, you're making a nice profit. All right. One thing about pending orders, if we were getting near a weekend, something like that, if it's Friday, be careful with your pending orders because you can get a gap from Friday's close to Monday's open. If the news goes the wrong way and it gaps 1,000 points below your entry, you're going to get that entry price that we asked for. This is what it'll give you for your opening position. And if it actually gaps 1,000 points down, you'll start out in the negative, right? So be careful, especially in today's conditions with the indices and gold and oil, having pending orders that carry into the weekend. To manage risk, you might even think about not allowing your pending orders if they haven't opened, say by Thursday or so, to carry into the weekend because it's a bit risky. Okay. Any questions at this point? Fernando, good question. Fernando's saying all of our trades are related. That we were going up on oil. We're preparing a buy limit to go up on Dow Jones, etc. Right? So he's saying, couldn't they all lose at the same time? And my answer to that is, of course they could. But another perspective on it is the timing is different. It's all about timing, right? The oil we're already in. We already made a profit. This Dow Jones move is if oil started going the wrong way, then Dow Jones might drop to this support level, and then we get in at a better price, counteracting the drop of oil. And so then you have the potential with a bounce to make profit on the other. So when you're trading on assets that are related to each other and you think they might all move one way together or the other way together, if the timing, the entry in terms of timing is different, then it's not the same as trading all of them with the same entry time. It's a very good question. But by spacing them out by entry timing, then that also diversifies as well. Okay. And our look at gold certainly wasn't the same. We were willing to trade on gold, sell market with a buy stop prepared in the opposite way. So I'm not suggesting that you should only trade one way here. Fernando, what could you also set up below this support in case it breaks? Right down here. What could we set up down here if the support breaks, if it hits, let's say 17,850? Yeah, have your sell stop, right? So again, we're not trying to guess the market. We're trying to play the market. It's different. We're willing to accept that we might be wrong. That's why on the gold example, we're looking at the market sell that was profiting, and we also backed it up with a buy stop because who knows what might happen. Put a buy stop above the resistance. With this, why are we first talking about a buy limit off the support or a market buy right now? Because that's the direction of the fundamental news, and it's at a pretty good entry point, technically speaking, to make that move. But we also can prepare for the opposite. In this case, you'd have a sell stop below the support in case unexpected news comes. You know, what would happen if they say Senate and House of Representatives in the US aren't even close to a deal? If that article broke, you'd probably see this support break and a buy stop would be triggered. Okay, so I always say trade with what you know, which is why we prepared maybe a buy limit here, or you could do a market buy. Trade with what you know fundamentally, and technically get the entry points you like, but prepare for what you don't know. That's the sell stop in this example. That was the buy stop in the gold example. Okay, so trade with what you know, prepare for what you don't know. That's the idea of combining within your technical analysis market moves and pending orders as well. Derek, you can catch the recording. It's okay that you showed up late. You can catch the recording on our YouTube channel. Okay, it should be there by tomorrow. By tomorrow morning, early afternoon, it should be posted. Okay, so I might close my oil. Why not? Okay, another 400 or so in the bank. Maybe you then say, okay, I've diversified a bit, so let me buy on my Dow Jones. Maybe I do 0.1 and buy. Okay, so you still could have your buy limit for another 0.1 in case it comes down. You can re-enter at a better price. My stop loss on this, maybe I'm going to go to 5-minute candles, and I'm going to say if it even drops below this low point here, I'm out. So 18,225. Why am I doing that? Because I backed it up with another buy limit. So I don't have to risk much. I'm in on this in case it rushes up. I'm willing to take a small loss if it reverses. So I put my stop loss, 18,275. Just an example. Certainly not telling you should make this move, but this is so if you feel like the fundamental news says it should go back up, but you're afraid it's not going to come down to the support level again to trigger your buy limit. So for some of what you're willing to risk, you could get in on a market move if you see it starting to uptrend. I could see it was starting to uptrend, so I'll take a little shot, right? But at a low-sized risk, 0.1 on a balance of 100,000, it's not much of a risk percentage-wise on the downside because I put my stop loss relatively close below the first little support. But I have a nice large potential on the upside. Okay, it could go up to the resistance level it was already at today. So on this take profit, maybe I'll put my take profit at 19,450 because it reached higher than that today already. So I go back, I say modify or delete, take profit 19,450, large potential profit, small risk. And if I am wrong and it hits my stop loss, I'm re-entering at a better price potentially with my buy limit. And if I'm wrong on that, I'm entering down here with my buy stop. I have no emotional attachment to one direction or the other. If that support level breaks, then man, it must have been bad news and our fundamental analysis changed, right? Something must have changed with what's expected to happen today, which is probably some kind of deal between the US Senate and House of Representatives, maybe before the day ends, at least maybe some momentum with that. Okay. All right. So maybe we'll look at one more asset before we end things. Does anyone have a request? Fernando, your percent of being right in terms of profitable trades is not what's important. In the end, it's do you profit on the set of trades? So if you have enough flexibility within your account and you're not overzealous with your first position, it's more like a chess match. I have no problem with a large balance trading 0.1 on Dow Jones with a small risk. If I'm right, great. If it's wrong, I re-enter at a more advantageous position. If that's wrong, I re-enter with the new momentum on the broken sell stop. Eventually, in this market, the way things are running, you're going to catch a big run in the correct direction. Okay, and hopefully profit more on the one that you catch right than the small moves that maybe didn't go the right way starting out. James, I recommend you learn how to read the price levels on the chart manually like we're doing. Understand why those levels are breaking and moving, and then maybe start to use indicators, whether it's a stochastic indicator, RSI, Bollinger Band, something that gives you an idea about when an asset might be overbought or oversold. But then you already manually looked at things and you understand which direction you prefer. And so some of those signals from the indicator you might listen to and others you might not. Okay. Yeah, let's look at Bitcoin. One last asset someone's requesting. Bitcoin USD. Here we go. So what do we see? We see a big run up and we see consolidation sideways. Okay, certainly consolidating right now. Something has to give, right? Because there's a support level. Here's a resistance level. The market is tightening. Okay. By tightening, I mean the low points are getting higher, the high points are getting lower. The market's tightening. Okay. Eventually, we're going to get a breakthrough one way or the other. Okay. So this type of setup, I think you could put a buy stop up here with a stop loss below the resistance. You could put a sell stop down here with a stop loss above the support. Okay, if this support level gets broke, there's probably some momentum with this. If this resistance level gets broke, there's probably some momentum up. And you can see a take profit could be at this peak here that it already reached today. Okay, it was up here today already. So if this breaks through, it easily could run to today's high. And if this breaks the support, technically speaking, there's a take profit area down here that would make sense. The old resistance level that it broke through just today. Okay, so today it was up here and today it was down here. So it easily could reach either one. Your guess is as good as mine which way this might go right now. So that's why pending orders make sense, because buy stop up here and a sell stop down here waits for confirmation of the trend, the breakthrough. Okay, but it looks like there could be huge movement on this soon. Okay, pending orders here might make sense with a small risk to the other side of the broken support or the other side of the broken resistance. That would be another way to, one way to play it. Okay. Okay, NASDAQ, and we'll call it quits. We've got a request for NASDAQ. We looked at the Dow. NASDAQ's going to look similar. Okay, so I see consolidation here too. It's trying to go the right way. You see my little test, my feeling things out trade on the Dow. It's back into the money. We see this trying to climb. I think a market move on NASDAQ would make sense. Okay, with limited risk. So we're starting to see momentum. Why? potential deal in the US, right? We keep saying it. So, but limit your risk accordingly. Don't blow your account on a move, right? Nobody wants to blow their account on a single move. Eventually you're going to be wrong, right? So if you're trying to go with the momentum and you say, okay, stop loss below the first little support, it's like trying to catch the momentum and risking just a little bit. So there's my stop loss, and I let it ride if I want to, right? Maybe because I doubled up here, let me get out on Dow, take my profit on the Dow Jones, I let NASDAQ run, okay? I actually like the entry point on Dow Jones better, but you were asking about NASDAQ, so here we go. I still think these indices could challenge the resistance levels up here, this being the first one, this being the second one. But don't be afraid to get out if it breaks your support and potentially re-enter. You could put a buy limit down here, just like we did on the Dow Jones. Okay, you could have a buy limit in case it tests this support all the way down here. A buy limit ready to go. You could have a sell stop in case it breaks the major support. And you can make a market move at a spot that makes sense to you. I just kind of jumped in, maybe not at the best entry point on that, but I still think odds are maybe likely that this could challenge this high point before it challenges this low point down here that I put as my stop loss. Again, why am I making that judgment? The fundamental news, I think, is on that side. Okay. So far, we've collected nothing but profit in our examples. We'll see what happens with this one. I'll let it run for a little while. Okay, everybody, thank you for joining. We'll be going again on Friday, 1 p.m. GMT time. Okay, join if you can. Again, the recording will be on the YouTube channel if you can't catch the live one. Okay, thank you, everybody. Have a good evening.